If you don't know what a bull market looks like, we're in one. Let's talk about it. Hi, I'm Adam Anderson, owner and founder of WealthGuard Advisors.
Hello, I'm Blake Anderson, certified financial planner. Thanks so much for listening.
This is mostly for our clients to know what we're thinking about, but if you found us on accident, please like, share, make a comment. We'd love to hear from you, see what you're thinking about also, or if you have questions about what we're thinking about, we're here for you. And please look at the disclosures at the end of this video. All right, Blake, let's talk about the S&P 500, huh?
Yeah, it continues to rally. It seems like there's no end in sight. It's obviously tech-led, AI-led. And it's been very strong, but we are seeing a little bit of widening out. I was looking at the Dow Jones, the Dow average, and it has been very strong. Last week was the ninth straight positive week for the Dow, which is not very common to have 9 straight weeks. Hopefully, let's go for a 10th. But looking at it, it looks technically like a breakout. You know, we hit 50,000 back in February. We came back from that in February and March, and then we just hit 50,000 again about a week and a half ago. And then obviously we're at 51,000 already.
Yeah, so this would be what technicians would call people that look at the charts, technicians, is a cup and handle. It's kind of a low handle, but it is definitely would follow in that definition, and then we see a breakout on higher volume. So, the Dow Jones is 30 industrial companies. It's going to have Caterpillar and American Express and Visa and McDonald's and a lot of these obviously American types of industrial companies. And I think NVIDIA was added to that list. We should have the list in front of us. But this is really the industrial companies. But the market is really being led by technology. So I'm going to look at the Nasdaq or the QQQ, which is the index for that. And that's really what is driving this market is those tech names. And we talk about the S&P being up about 1%, a little over 1% last week, and the Nasdaq was up almost 2.5% for the week, if I'm not mistaken. Is that correct, Blake?
Yeah, just under 2.5%.
Yeah. So still we have technology. Basically, the AI revolution is driving this marketplace, but we are seeing a little expansion on that.
Yeah, what we're seeing is all this capital expenditure going into building out AI is what's driving this whole economy. And we're seeing huge revenue increases in companies that are even tangentially related. One that stands out is Caterpillar, that we mentioned as being a Dow component. Their tractors, their trucks, they need to be there as you level the ground and lay foundations for these massive data centers going in. And obviously, a lot of tech companies are more directly tied in. And we think of Micron that continues to just go up and up and up.
It's
And
really an unbelievable story. I know we talked about this weeks ago. I mean, even today, it's up 6.5%, and just off this March low here, that's a 200% gain. It's unbelievable, and I've heard price targets for Micron in the 1800 range. So, I mean, they're really looking at potentially doubling again on this, and
yeah,
the price per earnings ratio is actually pretty low comparatively because their earnings are growing so fast. It's an amazing story. I wish we had more. We do have clients in it, but I just wish we had more. So,
yeah, when we look at, and that's the story across the market, but Micron's a particularly poignant example where their forward earnings, they're only trading at about 10 times, a little over 10 times their forward earnings, where historically they've traded in the 20-ish times forward earnings range before all of this craziness happened. So really, it's not that crazy for it to double again from here, which seems crazy when you look at the price compared to where it was even a month ago. But that's the story across the market, and I think there's plenty of room for this to continue, despite how sky high some of these prices seem.
yeah, I want to talk about AI and the death of software. Do you want to talk about that for a quick minute? Because we're seeing that software might be having a resurgence?
Yeah, we talked about this a little bit a couple weeks ago when we brought up the cybersecurity companies, where we see, these AI models, the utilization of AI, they still need other applications to operate their businesses, to create value. And AI, there was some fear that, everyone would just AI vibe code their own solutions there. But these existing operators are, in many cases, better and just more efficient to use the existing solution than to try and AI vibe code a replacement every time you need one. And so we're starting to see a turnaround when I look at IGV, which is the iShares Tech Sector ETF, which focuses a lot more on these software names. We saw Friday was huge. Today is huge again, 6%. And there's plenty of value being created here.
15% last 3 days. It's pretty big.
Plenty of value here as we're recovering from these fears that AI would just, supersede all these existing players. And that's just not reality.
Yeah, I was very suspicious of that. I talked about it a few weeks ago also that I just don't see that have been more hype than reality. And so we've had some IGV, we have some software companies, and we're looking about being a little heavier in that. We're very tech heavy already, and so that makes me a little concerned. But I outside of that, I want to talk about something that maybe is not tech related that is also an important story that's going on in our economy, and that's energy. So the energy index is XLE. And as you can see, it's kind of gone sideways here for the last 3, 4 months. It seems to be hitting a bottom and a bottom and a bottom here. And when I see something like a Micron that goes up and up and up, it's really hard for me to like commit people's money to something like that. But when I see something like this, where it seems like this might be an overlooked sector at the moment, but there's a lot of concern that once the Strait of Hormuz opens up, that oil is going to flood the market and the price of oil is going to just tank. And so people are moving away from your traditional oil companies, your Exxons, your Chevrons, and these types of things because of that fear. But I'm kind of the same way we're talking about software as the same thing I'm thinking about with oil and gas. Because what's happened is that all these countries, basically every country in the world, is tapping into their strategic petroleum reserves, and some of them are very low. So they're going to have to refill those reserves. And also, oil companies are not because they're so concerned about that boom bust cycle and that they're just a drill baby drill and they're going to have just oil, is going to they have not been drilling. So there's not a lot of new wells. They're much more efficient with the wells they do have, which is keeping up the supply, but they're not drilling new wells really, surprisingly for that same fear. So I think that there's going to continue to be kind of a, a higher oil price going forward. And I think a lot of these U.S. oil producers, your ExxonMobils, your Chevrons, are also going to benefit from directional the direction of oil purchasing has been moving away from the Middle East and more towards the U.S. As you notice that if you've heard, there's tons of oil tankers that are heading to the U.S., they're heading to the Gulf, they're heading to Alaska to fill up, and some countries are realizing that U.S. oil might be more expensive, but it's a lot easier for Asia to get oil from Alaska than it is to get it from the Middle East and from the Gulf of America. So I just think there might be an opportunity in the energy sector.
Yeah, oil's not going away. We are seeing some very impressive advancements in alternative energy sources. Solar development continues to be impressive. Nuclear is obviously a big story. But all these things are going to take a lot of time, and oil is not going to go away. Oil is not, a 5-year window here before we're done with oil. It's more like a 50-year window or longer. And oil is going to be around for a long time and continues to be necessary. And don't forget that the whole Russia-Ukraine situation is still going on. I know it's not, front page news anymore with what's going on in Iran, But there's still embargoes on Russian oil. And now that we're potentially again seeing the Strait of Hormuz shut again today, there was a lot of back and forth, not sure what's going on there. But there's opportunities for American oil, especially. Also, some South America. I know Brazil is trying to increase their oil production, but it's not there yet. And so there's opportunities in the companies that can produce oil. We're going to see them getting good valuations. I don't think oil prices are going down just yet.
Yeah, so we did see a nice decline in oil over last week where it dropped quite a bit, about 17%. So we have seen a decline in oil prices. So actually the Brent crude is down to about $80 a barrel, which most people watch. This is the US oil. We are seeing a pretty sharp decrease over last week, but I don't think that's gonna, I think still oil companies' profitabilities are very high, and I think that's going to remain that way for a while. So I am watching that as a diversification as we take profit off of some of these gains that we're seeing in the tech sector. We can rotate into something that's more stable, pays a dividend, and has some potential upside net, to that, which probably would not have the same kind of growth that we're seeing in the tech names that we're talking about. But we also want to be careful that we don't become overweighted into one sector, i.e., tech. So, yeah, but this is a bull market. We bull markets climb a wall of worries. So when I see people coming in here and they're worried about government policy things and whatever, uh, and the market just keeps going up. The numbers are great for unemployment's low, the GDP is solid, the household incomes are going up. They're actually going up faster than inflation, supposedly. That's what I've heard. So we're seeing a lot of really good things in the economy right now, and this is we're in a bull market, and we'll see. The bull markets could last a long time. So I'm optimistic. All right, Blake, anything else you want to close this up?
Thanks so much for listening and joining us today. Just a reminder here, WealthGuard Advisors, we are a registered investment advisory firm registered directly with the SEC. Part of that is a fiduciary responsibility to our clients where we're obligated to act in our clients' best interest. We would love to talk with you. We offer free initial consultations to see if we could be of service or even just discuss what's going on and give you some clarity into your financial situation. Thanks so much for listening and watching, and we'll see you next time.
Thanks for watching. Have a great week. Talk to you soon.